and welcome to a halftime report. I'm Ekta Batra. With me is Sonal Bhutra in the Mumbai studio, and we have Mangalam Malu joining in from the Delhi studio. Mangalam, well, you definitely have better weather than us, but the weather is not great for the Indian markets at this point in time. The global markets have definitely spooked sentiment at this point. So after a good day in yesterday's trading session, we haven't managed to sustain that kind of optimism today. The steps by the Bank of Japan, as well as the overall fear of a global recession, seems to be weighing. So as of now, yes, there's no Santa Claus rally in sight. Let's see whether there's any kind of movement in the second half of the trading session. As of now, we have 49 stocks which are in the red out of 50 stocks in the Nifty. Hi, Sonal.
Hey Ekta, good morning. Good afternoon actually. Hey Mangalam, good afternoon. Well, you rightly said there is no Santa Claus rally that is in sight today, and the mid-cap index, that is the one which is underperforming. This has been a part of the market which has continuously been underperforming the benchmark, so to say, 1% down in the mid-cap index. However, there are pockets which are doing really well. Sugar rally continues. We have the fertilizer space which continues to do well. So yes, there are pockets which are doing well, but of course, the global updates that we've been getting, that is something which is putting a lot of pressure on the Indian markets as well. After yesterday's rally, there's a lot of profit taking that we are seeing today, but remains to be seen which way things will go. Hey Mangalam.
Yes, good afternoon. And Ekta said there is better weather there, but what good use is good weather when you can't see anything out here, right? So, well, we have both our pros and cons, but at the same time, for the market, it's interesting the way, the metal stocks are underperforming. The one pack that I'll be looking at right now is the IT pack, because when all these uncertainties happen and we see some strengthening in foreign currencies, etc., the IT pack tends to see a bit of an outperformance. Of course, that wasn't the case to be because global growth concerns led that sector to underperform in this year. So the question is that after this underperformance, can we see some recovery there? As we speak, TCS is one of the stocks which has recovered from the lows and now moved into the green. Will we see that for other stocks or not is the big question. But like you all pointed out, the mid-cap index is where the most of the brunt is right now. They've been bearing 2,000 stocks in the red for just about 900 in the green. And the number of green stocks are actually declining, even as the number of stocks in the red are only increasing. We're seeing some weakness. The question is, where do we go from here? The 50-day moving average of the Nifty is just about 100 odd points from here on. So will that be a support or not? The Nifty Bank, however, is below the 20-day moving average. Back to you guys.
Okay, all right. So that is the market setup, but let's get sector specific and talk about more themes now. Indian real estate sector recorded private equity investments of $5.1 billion in 2022, according to the latest report from property consultancy Knight Frank. Knight Frank report suggests that despite recessionary concerns, PE investments in Indian real estate assets provided favorable investment avenue. To discuss more on this, we are now joined by Gulam Zia, who is the Senior Executive Director at Knight Frank. Gulam, good afternoon. Thanks a lot for joining us. Well, an interesting report, but of course, we have seen a decline on a YOY basis because of the recessionary environment that the report suggests as well. What are you seeing here? Where is the maximum contribution coming in from? And going forward, do you expect more pressure or more weakness in investments because of the environment that we are in?
Okay, the first part of your question is about where do we see the action coming in from? And that is actually the interest in office market, which has been, in spite of whatever is happening from the work from home to global concerns, etc., the investment in office market in real estate continued to thrive. It's almost about 50%, about 45 odd percent of the investment, 6.2 billion that you're talking about, has come into commercial space. So commercial space is thriving. Residential has been shrinking for last half a decade. The share of residential is nominal. Warehousing has started shooting up and doing a great performance. In fact, that's one sector where the performance has improved in last 2-3 years, including last year. So overall, these are 2-3 key sectors. Retail as a sector, in any case, is not really a very regular sector. If a bulk deal happens, you do see a jump on retail investment. Otherwise, it remains very, very low. So key sectors, office sector is the biggest one contributing. Second is warehousing. Residential, as I said, is a nominal share of the overall pie. However, the second part that you spoke about is how do we see the future? Well, the concerns are looming large. So while we spoke about good amounts of capital flowing in real estate in 2022, 23, we'll have to really wait and watch how the global scenario is opening up, whether we call it recessionary trends or the war concerns, etc. Even office market is going to see some concerns. So while warehousing may continue to perform, overall concerns shall remain for the coming year.
Okay. Gulam, hi, welcome to the show. Well, it has been a great year in terms of PE investments, like you mentioned, especially for the entire commercial warehousing segment. But it's actually declined on an absolute basis as compared to 2021, correct? We were at around $6.2 billion in 2021. That came down to $5.5 billion or thereabout in 2022. Based on the headwinds that you're estimating, are you predicting that it could be lower than this $5 billion in terms of PE investments going into 2023? What is your absolute value that you're estimating at this point?
The problem of that is, if I look at last 10, 11 years trend, there was a time when we really peaked out at about 7.8 billion, I think somewhere in 2016 or so. Thereafter, while COVID did bring in a huge reduction in the private equity fund coming in, but last 2 years have been good. So 22, while we are looking at about 15-17% of a reduction over 21, but that said, in spite of last 6-7 months of continuous recessionary environment all over the world, this amount has also come in largely in the last quarter of the current year. And that is also something which is giving us some comfort that whatever is happening, while the investment scenario all over the world is also equally bleak, perhaps there is some silver lining in investing in India because of our own situation has not been as bad as the global environment. So that is giving us some comfort that in spite of whatever is happening, the investment shall look forward, the investors shall look forward to India as a key market to continue. And because a lot of other investment avenues are drying up, India shall remain a beneficiary of that. So it's very difficult to give an exact number, but we are assuming next quarter or two. After that, I would say next year's quarter 3 and 4 will give us a huge boost. And that perhaps would be equal to where we are or even go up in the coming year. So in spite of all the tailwinds or all the headwinds, etc., we are still looking at a positive trend emerging for India specific.
Right, take that point, Gulam. I was just looking at the data that your report has provided, and just on an absolute arithmetic, calculation, it turns out that the average deal size was the highest that we've seen in 2022 as compared to the previous years. If you just take a look at the number of deals and, divide the value by those number of deals itself. Could you give us some more color on the qualitative aspects of these deals in the PE? How much of that was stressed assets sale? How much of that in terms of valuation was higher than the previous average valuation metrics, etc.? What are the kind of returns, yields that investors are looking at because it's commercial and warehousing which is doing much better?
Let me start answering the last part of your question. What kind of yields are happening? In fact, one thing which is emerging pretty clearly, that the yields have started inching up. Previous years, it was actually closer to 6.5% kind of a yield was happening. But in the last year and a half or two, we've been looking at it actually either closing into 8 or even crossing 8. And 8% of a yield was, say about 2 years back, was unheard of. But that's what is happening. Even the established big players are now looking at closer to 8 or beyond 8 kind of a yield. So that's very clearly a trend that has emerged in last couple of months, number one. Number two, your question about the deal sizes. What really happens is every year when we see 1 or 2 large deals, that number goes haywire. Last year, we did see a lot of deals of perhaps almost the same size, not much big investment hasn't really happened. These are mid-sized ones spread all over the year. And that's what was was showing the high number of deals that we are looking at. And that trend shall remain, because I can't read much of a trend in that, because like as I said earlier, a retail investment, 1 or 2 large malls sold may have one deal worth of a couple of, at least about 150-200 millions each of those deals can actually change the whole scenario. And because residential remains a fraction of overall investment, residential is one sector where you see small investments coming in. Office sector continues to be driven by large deals. And one part of your question was, how do we see the future of the office transactions or yields? As I said, yields are already shrinking. Office transactions shall continue because we, at the same time, while we're talking about capital investment, next couple of days, we shall have our next report on office sector for the whole year. And that also is looking pretty promising. We are, while looking at huge concerns, we are looking at good transactions happening in office sector as well.
Okay, Gulam, thank you so much for joining us and giving us a perspective as to what's happening as far as the PE funding in the real estate sector is concerned. It was a pleasure speaking with you. But to the big story of the morning, the Bank of Japan shocked global financial markets by increasing the cap on the 10-year yield from 0.25% to 0.5%, and Asian equities fell and the yen strengthened after the announcement. Lata is joining us with more details and more about the sudden announcement from the Bank of Japan. Lata?
Well, this is absolutely a bolt from the blue because